Vikas Khemani, founder at Carnelian Capital Advisors, joins us on the show. Good to have him in the studios right now. Vikas, morning, and welcome in your new avatar. Tell us what brought about the change.
No, I think thank you very much for having me, and so it was there in my mind for quite some time after working in a great organization like Edelweiss. The entrepreneurial bug always, keeps on biting you. So it is just.
You left Edelweiss, the stock came down 50%. Just a coincidence?
That's very wrong.
I'm putting facts out.
No,
See, my job is to put facts out, and you have to react to facts.
This is all, creation, but I think it's all unfortunate situation, a chaotic situation in the market. And I do believe that, it's a great organization, it's a great company. And
will you buy the stock now? Now we can officially discuss stocks.
Sorry?
As an investor, would you buy the stock now? Because the stock has fallen 50%, Edelweiss stock.
Any day. I mean, I do believe that it's a great management team, great business model, and I continue to believe that whether I am part of it or not, I would definitely love to. I am a shareholder, I must disclose, give a disclaimer. It will do well over next, 8-10 years, and I haven't sold, still I'm continuing to be a large shareholder, so, and I will continue. So I have no doubt in my mind that Edelweiss is a great franchise, great management team, and whatever we've been hearing about the risk management issue, I continue to believe that it is a very, very strong risk management processes. Obviously every business model will have a risk and credit cost will be there, but I don't think some of the crazy talks we hear about, I don't think there's any kind of truth in that. And that again I'm saying, sitting outside and being part of the organization for so long, only having seen risk management processes, I'm not giving you any sort of inside info around anything, but I'm just telling you around the construct of the organization, culture, and I don't have any doubt in faith in Edelweiss.
Okay, let's talk about the market construct then. Does it make you more happy that crude is now finally cooled off from those highs and it's back at 75? Or are you more anxious about the fact that we've got just so many events lined up, state elections, you've got the general election as well, and the fact that the market construct is looking all that shaky, currency continues to be weak?
So I think we have passed through a very, very turbulent time. We had a situation where, currency, crude, some of the internal issue, everything kind of hit together. We had over leveraged market, which also kind of led to and then we had this ILFS issue and all. So all of them have now kind of in some sense panned out or kind of have created a very big dent in the market. So I do believe that having seen this kind of situation, definitely the risk appetite of the market has right now reduced, but I don't think there's a structural issue where it can create a significant downside from here. Obviously, one can never predict or precisely say when it's going to be bottom, but I think by and large most of the damage is done. If you are ready to overlook, another 5-7% kind of downside, this is possible because one can never predict in this kind of fragile environment. A lot of froth is out, and that gives you a little bit of more comfort. And some of the issues like currency and oil is settling down. So this probably next 3 to 6 months time would be one of the best time to invest in the market, because I think economy is on a real trend. You might see a little bit of slowdown because of the ongoing issue in a shorter term, but structurally there is no change, no challenge, and all those triggers we've been talking about all these years of growth remain intact. And when markets give you setup like this, probably those are the times and opportunities to kind of build your portfolio, rebalance your portfolio, adjust your portfolio. In good markets, always we all collect stocks or buy stocks which are probably you should not hold. So I think maybe it's a time of rebalancing, but at the same time I remain completely bullish, and this vintage I think in next 3 to 6 months will give you similar kind of return what probably we saw in 2013-14 kind of in a period.
I'm so with you, and if I look at ICICI Bank numbers, L&T numbers, there is definitely an evidence. First it was a belief, then it was a hope. Now there is evidence that the economy is on a turn. But I have one challenge with the current setup, which I never thought 3 months ago existed, which is the liquidity crunch. NBFCs will stop lending, banks will start lending. But what NBFCs will stop versus what bank would start, the gap would be very large. And if the credit in the economy gets sucked out, whether it's at retail level or at corporate level or SME level, it will slow down the wheels of the economic recovery. And I don't think markets have really recalibrated the growth on the downside.
Which is the point I made, Nikunj, that I think you might slow down the growth, but I do not sort of completely agree or echo the sentiment that NBFC will stop lending. See, there is a temporary phase of right now when you are in the middle of a complete crisis, you have to stop. But it's not that 3 months down the line, mark my words, that 3 months down the line, all these NBFCs will be back. NBFC serves a purpose in the market. They are not a business model created out of vacuum. They serve a purpose which banks cannot. Yeah. And in my opinion, that will continue to remain in a reasonably quantum and size. It may not grow as, some of them grow at 30%, 35%. That kind of growth may not be immediately possible. Who knows, it might return back, but they may not be possible. Secondly, this opportunity has recorrected or corrected the anomaly in the business model of asset liability mismatch. So most NBFC will have to now keep that in mind, that asset liability mismatch has to kind of go away. That will increase their cost of borrowing, but so that they should be able to pass on. If they are not able to pass on, to that extent competition will go down. So I think market has its all self-correcting mechanism. No doubt short term there will be slowdown, but I have no doubt that NBFCs will continue, they will grow, they will flourish. Banking, private sector banks, in my opinion, offers a great opportunity right now, because for them both liability and asset side is sorted out. They will have less pressure on pricing as far as the asset growth is concerned, because they can now grow in housing when others are not growing as fast. So to that extent, I feel that the pendulum, at least for next 12 to 18 months, has shifted more in favor of some of the private banks, likes of ICICI Bank and Axis and HDFC Bank. I think those guys would, in my opinion, do very well. So that one can adjust. I have no doubt in my mind. But NBFCs will stay.
So within, you're painting NBFCs with the same brush. Do you think HFCs within NBFCs hold value? Housing finance company?
No, HFC also serves a purpose. Okay, I don't think.
Or are they more susceptible?
They're not susceptible. The only thing which is going to go away is the asset liability mismatch. If I was getting, NBFCs were borrowing short and lending long, and that will have to be corrected. To that extent, NIMs have to be adjusted, or the pricing have to be adjusted.
Wouldn't you say that housing finance companies are more at risk because of their ALMs?
Right now, I would say, I don't think there's any systemic. Some of them will have to go through the pain, because they have to adjust to the extent of, they have to repay some of their CPs, and that will be out. But housing finance as a model will exist. Which companies will sort of not survive, will slow down or will go down. I don't think anybody is going down, but will sort of not grow as much as, that is the only time to be, time will tell us, again, based on, and I think HFCs with little bit of more parentage credibility, better rating profile, better governance, better risk management would have a better chance than some of the others one. But I don't think there's anybody which is going down. At best, they might slow down growth, they might degrow till the time this readjustment happens. And again, we will have to wait and watch. But I believe NBFC and HFCs both will continue and do well.
Because if I had to ask you one stock idea, aside of Edelweiss of course, that you recommend buying for a slightly shorter term time frame, maybe 1 to 2 years, or a theme that you think is worth looking at, which one would it be?
I'm very bullish on private sector banks, specifically a theme, and and with all disclaimer possible, I can say I think ICICI Bank, in my opinion, I feel right now worst is behind, and I think it's a time where lots of opportunities are, leadership changes there, organization is getting momentum or energized. I think that stock with the reason in this whole entire chaos, if you see, stock never fell. It says something that what is there in that, right? So I think, in my opinion, it offers a reasonably good risk reward for the investors over next 12 to 18 months and even longer for that.
Will you buy stocks irrespective of the election event?
Yes.
Okay.
I think we have seen too many elections in our lives. Elections have short-term impact. That's what I'm saying. If you are ready to prepare for 5-7% downside, which you have to in any time in the market, sometimes even more, as we saw recently. But I don't think it will matter.
So your view is very clear that the September-October 2018 trough in the market is a period you should buy and participate. If you have cash on your books, just invest and get in. Like a poker match, all chips in.
So as I said that still there are lots of events which are there. You can, rather than going all in and you say next 3 to 6 months, I would say you deploy your all money. In my opinion, next 3 to 6 months I will go all in. Okay. Because you will see most of the events playing out, whether it is international or local. You will have Fed playing out, you'll have US elections playing out, your local elections playing out. I think most of the events by and large would be done, and then you will start. So I think, in my opinion, this from here to March, April, May period should be a great period to build your investing portfolio.
So tell me, is Carnelian your lucky gemstone? Why Carnelian Capital Advisors?
Yeah, I mean that so we did lots of names, and this came out as a, it symbolizes rebirth, rebeginning, bit of luck, bit of prosperity. So I said, okay, that's what I need right now at this point in time.
Wish you good luck, but just on a lighter side, how things are changing. Earlier when you would start, you would name your firm on your name, your family name, on your son's name, on your child's name. So that is missing, right? Now it's lucky gemstones and other things which we look at.
Stunning looking stone though.
That's a lady talk which I'm not going to participate in.
No, but all the very best.
Thank you very
Thanks
much.
very much.
Thanks.
Thank you very much.
Thank you,
Come more
Vikas.
often.
Sure.
Now.
Thank you.
Especially.